Inflation has risen to its highest level since June 2014. The rate, as measured by the Consumer Price Index, rose from 1.6% in December to 1.8% last month. The Office for National Statistics says the increase was driven by higher global oil prices and the fall in the value of sterling. Our economics correspondent Andy Verity reports.
Prices may be up, but it's not yet the consumer who's being squeezed hardest. It's the company that sells you the goods, and even more so, the companies that produce them. Following the devaluation caused by the Brexit vote, this East London brewery is paying much more in pounds for the same raw materials imported from abroad. It's boosted prices by 5%, but its costs have risen twice as fast.
For all small businesses, but equally so for us, we've got auto-enrolment for the pensions coming in this year. We've got a huge business rate increase this year. We're a London living wage employer, so our sort of staff overheads are significant. And on top of that, we've now got a weaker pound, so our imported raw material price is going up and up. So it's a real crunch point for us.
Today's inflation rate is still below the Bank of England's target of 2%, with prices rising 1.8% in the shops. But upward pressure is coming through the pipeline, with prices at the factory gate up 3.5%, and producers aren't yet passing on the much higher cost of raw materials, up by more than a fifth. Also driving prices up is a 17% rise in the cost of petrol and diesel. With that come higher transport costs. But the government points out inflation is still comfortably within the target range.
Well, I'd remind you that the inflation figure announced this morning at 1.8% is still below the Bank of England's target. The Bank of England Monetary Policy Committee is seeking to manage inflation to maintain itself at or around 2%. So when inflation is at this level, the economy should be working well.
The economy is growing much more strongly than opponents of Brexit predicted it would. And on financial markets in the city, the next move in interest rates is expected to be up.
Well, the market sees a real possibility that rates may have to go up before the end of this year. This is very much a reflection of the fact that economic activity has been so strong coming into 2017, and the consumer has held up relatively well so far.
Until recently, price rises for consumers were tamer than they've been since the 1960s. The price of fish, for example, is only back to where it was 3 years ago. So far, consumers have been shielded from paying higher costs, but inflation above the 2% target now looks inevitable. Andy Verity, BBC News.